Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 16th until the 20th of May. Before we dive into the webinar, a key highlight of the week was targets plunged by 25%, which makes it the biggest single day decline since 1987. As always, please note that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So, looking at stocks first, the key talking point of last week was probably Target, the US retailer. Now, Target reported its earnings on the 18th, during the pre-market hours, where it missed the EPS estimates by more than 28%. I'll pull up the chart in the meantime, so you can have a look. It's actually on the screen now. I'll switch it to the daily though, so you can see the drop that I'm talking about. So this was the day before the earnings report was released. We had the earnings report being released on this day. And it was released, like we said, in the pre-market hours. When this is the case, the impact is seen pretty much on the exact same day, which is what we can also see right here with this candlestick. And again, this is the steep drop, which was by 25%. And once again, the biggest single day decline since 1987. So we can again see what kind of impact the earnings reports can have on the individual stock prices. And this was also actually a stark reminder of the Black Monday stock market crash, which again took place in 1987. If we switch this on the weekly time frame, with the drop from the 18th, this brings the performance of Target year to date to being down by more than 30% on the year. This is the start of 2022, and we opened, it was around about $230, and we're down now at $153, so almost closing in on a $100 drop on the stock price. Now, the earnings season is drawing to a close, with some last key corporations reporting their figures next week, which is going to be namely Nvidia, Dell Corporation, and Lenovo Group. So if earnings report is something that is in your niche of trading, then obviously you can have a look into those stocks and as to when they're releasing their numbers. Next up, moving on to Forex, the dollar index looks set for its first red day in 6 weeks. At the time of recording this webinar, it's down by 1.43%. So if I pull up the chart of the dollar index and we just measure the drop so far, we can see, it's around about 1.45%. Now, this also meant that all the rest of the major currencies took advantage and all rose against the US dollar. The most notable move, however, was that of the US dollar Swiss franc, which we're going to have a look of as well. The US dollar Swiss franc dropped by 2.83%, or 283 pips on the week. And we can see how it's been basically hovering around the 1.0 mark before we had this steep drop. Now, next week, we're also going to be having the all-important FOMC meeting minutes. So we can potentially see some further volatility as we head into the month's close. It could also be the last opportunity for the dollar index to turn into positive on the month, because if we switch on the monthly, we can see that although it's not quite a substantial drop, now if we have some positive remarks from the FOMC next week, we could see it turn green on the month, and it's basically going to be its 5th consecutive month closing in the green. And lastly, moving on to oil. Oil prices fell on Wednesday despite the better than expected oil inventory report. Now, prices dropped by more than 4%, or close to $4 as well, since it's pretty much hovering around the $100 mark. Let me just zoom in on the chart a little bit so you can have a closer look. So you can see we're around about $109. Now the drop came after it was announced that the US was working on easing its sanctions with Venezuela. A reversal of the sanctions could mean an increase in supply in the energy markets, with Venezuelan oil being poured into the markets. So obviously with increased supply, we could see a further drop coming in the next weeks as they continue the discussions, because obviously, again, it was announced that they were working on easing the sanctions, so it's not something that has been concretely agreed upon as well. So we could also see some increased volatility and volume coming into the oil markets, and depending on what the outcomes are, we could even retest the highs, which are all the way up here to 123s. If not, then obviously prices have been stuck in this range since mid-March, I would say. So we could see an explosive breakout either to the upside or the downside. Looking at gold, it was set to post a weekly gain at the time of recording this webinar. So if we have a look at gold, let's just have a look here. So yeah, as we said, it was poised to set a weekly gain on the week. It's been dropping for the past 4 weeks. It had a 4 consecutive week drop, so obviously this is going to be some breath of fresh air, let's say, for gold traders if we actually end up closing the week in the green. But if we do switch onto the monthly time frame, we'll be able to see that on the month it's actually dropped. It's going to be the second consecutive month that's going to be declining in value. And since we also had the benchmark 10-year US Treasury yields dropping, this could be some further positive news for gold traders, but I would expect them to be a bit more short-term. Again, maybe one of the reasons as to why we're also going to be closing green on this particular week. But again, looking on the monthly time frame, things are looking like it's going to be closing out in the red. Just like oil, it's been stuck in somewhat of a range, so we can see the lower end of the range around the $1,700 mark, and the top end of the range, which is about 1920, I'd say mid 1900s, which was essentially around about here. We did break above this range, but we didn't close above it, which is all important, as we could be seeing some sharp traders in all these levels above this range. And yep, there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you in the next one. Until then, trade safe.